The Reserve Bank does appear to be running out of ammunition, really, when it comes to interest rate hikes. You mentioned this is the 9th consecutive rate hike, and that's correct, but it's the equivalent of 13 because we had a couple of double rate hikes during that period. So this is probably the fastest rate of increase in interest rates that we've seen for decades, probably on record. It is really putting a lot of strain on households. And the problem here is that it's not evenly spread amongst households. Most of the pain is being placed upon younger households, people who've only just bought into the market in recent times, and particularly those people who plunged into the market during the pandemic housing boom at ultra-low interest rates. And of course, a lot of them are on fixed rates, which are about to come off and go variable. So they're going to go from an interest rate of 2% and less to 5.5 to 6%, which is a massive increase in their repayments, given the amount of money that they've borrowed.
And to the broader mortgage market, we know exactly what impact, say, a couple of extra rate hikes will have, because the RBA board, as you note in some great analysis you've written this week, that the RBA has already modelled the impact on the economy of rates going up to 3.6%.
Yeah, that's right. Back in October, shortly before Dr. Philip Lowe issued that apology about, sorry that you all took notice of what we said and went out and borrowed money, the Reserve Bank commissioned some internal research which I guess modelled exactly what kind of impact consecutive rate rises, or the kind of rate rises we're having, would have on Australia's households. And the results were pretty startling, because around about half of all Australian households with a variable rate mortgage were going to lose more than 20% of their spare cash. And as you go down the scale, I mean, there were some households that were going to lose 40 to 6% of their spare cash, and others up to 80 and even 100%. And the most worrying feature of the research was that 15% of all households would end up underwater. They wouldn't have enough money to pay the mortgage, let alone buy food or cover the expenses for anything else. So they will be in a very dire situation, and they'll be forced to either sell the house, try and refinance, which would be pretty much impossible, do some kind of deal with your bank to, go maybe interest only, or, stop repayments. There's not a lot of options for those people. But the kind of impact that this would have on spending within the economy as well is quite dramatic. I mean, obviously, interest rate hikes are designed to take money out of the economy, to stop people from spending, to lower inflation. But when you're having that kind of dramatic impact over half of all Australian households, the effects could be quite devastating on Australian business and then, of course, employment.